G'day, it's Jono, and we've got some portfolio thoughts for Monday the 12th of August. We kicked off corporate reporting season in Australia last week with Commonwealth Bank and Transurban and AMP and James Hardie. Interestingly, the market down a couple of percent last week, but leadership within the market changed. The mining stocks and some of the high-flying tech companies started to underperform. Miners down with the iron ore price falling around 20% in the space of a week. And some of the high-tech names perhaps coming under a little bit of pressure as markets concern themselves about the outlook for the economy and for risk assets as the trade negotiations seem to drag on longer and longer than we'd like. And certainly the comments from the US President on Friday night suggesting that maybe the talks in September don't go ahead is another cause for concern. Within the results last week, CBA was quite disappointing, lending volumes going backwards across all divisions, non-interest income down about 8%. And one of the more highly credentialed analysts in the market actually saying that CBA would be forced to cut their dividend in 2022 from currently $4.31 a share down to the low 370s. That'd make CBA the final of the big four retail banks to cut their dividend, assuming of course that Westpac cut theirs at their results in early November as expected. And it just proves that that it's a fallacy to think that the underlying bank earnings and the dividends that come out of those earnings are stable in a low interest rate environment. And so CBA has come under a little bit of pressure, but again, frankly speaking, I think there's more to come. What was positive and interesting is the market leadership change with the likes of AMP and James Hardie really bouncing strongly. They've been very unloved stocks, certainly AMP has been, but bouncing really strongly on perhaps a perception of a change coming through. JB Hi-Fi and Ansell and Aurizon today, Monday, are also doing the same thing. And we think that the best pockets of value in the market are from some of these unloved stocks. This week we've got Nufarm, Challenger, Telstra, CSL and Magellan all reporting. Be interesting to see how things go. Perhaps the bigger focus from a macro standpoint will be the jobs report here in Australia on Thursday. We flagged up concerns we've got that the softening jobs market is having an impact on household confidence. We've got job ads down around 9% annually, but we're yet to see it reflected through in the employment figures. I think it's inevitable that it will come. And, as I say, the construction data figures we got last week, the service sector data figures that we got out last week continue to indicate that despite the rate cuts coming through, the promise of tax cuts, the softness in the Aussie dollar, etc., that Australian consumers are yet to feel emboldened to spend that capital. And I really think it's coming down to their perception of a softening in the jobs market. Anyway, that's it from us. Have a great week.